right, it's 11 o'clock.
Very good.
11 o'clock sharp. I think we should get started. Colleagues, good morning, everyone. We are about to start our event, and we really want to make it our tradition to discuss various professional issues on our platform. And this is the first event in a series of events. We want to have a thorough professional discussion today, and we really hope this will be useful to all of you. A top professional discussion. Let me introduce our colleague, Michael. Michael lives in Cyprus, in case you don't know. Michael will be our moderator today, and he will open our event today with his presentation. Michael, the floor is yours. Please go ahead.
Good morning, and thank you very much for the introduction. So today, basically, we're going to have a conference on the IFRS update. So let me just start from the beginning. I will be the first one to open the floor. So my presentation basically is going to point out what are the audit challenges that we currently face in our profession, and some points how we can eliminate or mitigate those challenges. So to start with, I wanted to first point out certain challenges that we face. Now I don't see the presentation for some reason. It's not on my... Okay, yeah, excellent. So I think we all know what an audit is. We are examining the financial statements, and most of the times that's the biggest, let's say, scope of what we are doing as auditors. And based on the financial statements, we are giving an opinion which best describe the company and the picture of a specific company. In addition, we need to provide assurance as regards to the operations of a company or the systems and numerous factors. So, of course, all these things, they depend on the type of audit, the industry, and the specific circumstances. So let's start by pointing out what are the certain audit challenges that we face. So we have a challenge as regards the data quality and the availability. We have a challenge as regards the audit sampling. We have a challenge as regards our independence, the documentation, the scope, the IT, and the cyber security risk. So I'm just pointing out certain of the challenges that we face. I'm sure depending on the region that you are, depending on the market and the type of audit that you are performing, you will face different challenges. For example, some of you might face challenges of the data availability. There is not enough availability. On some cases, you might face challenges as regards the documentation or the audit sampling. You are not so sure how to make an audit sampling, and this is common actually. To move on, some other challenges that you might face is in relation to communication with management. So, for example, it's a bit difficult. It's becoming difficult to communicate, or there are certain misunderstandings with the management. Some resources constraints. So, for example, you don't have available resources in order to perform the audit. In addition, sometimes you might face issues with the client, so the cooperation that you will be having with the client might be an issue. A lot of times, what we are facing also is the time challenge. So a lot of clients, they are coming to us and they're saying, we need this done by 1 month, or 3 weeks. And that's a big challenge for us because we have a specific time and resources available. And of course, we have ongoing projects, and to try and manage to put additional projects or existing projects and to make sure that we stick to the time, it's a big challenge for us. Also, a huge thing which we're going to discuss later is the staff and the training of our team. Now, as you will see later on, when you are performing an effective planning, you have risk assessment and proper communication with your team and with your client. And when you incorporate also technology in your company, then that's one way of mitigating all these challenges. So let's go through some additional numbers that I wanted to show you, just to understand the picture international, what's going on, and perhaps it's going to make you feel that you're not the only ones that you have these challenges, because that is the truth. Basically, nearly 42% of auditors, they are saying that the most significant internal pressure is to prove to the value to the organization, and that's a big challenge. So people, they do feel the pressure, that the management, the staff, that's a big issue. In addition to this, we have the analytics are a critical operational tool for more than 55% of internal audit teams. Moreover, more than 60% of the auditors, they said that the amount of advisory services they provide, it has grown over the past year. This is something that I want to emphasize. So as we can see, and also I don't know if you share the same opinion like me, but we do notice that we have increased the amount of non-audit work. So it's not only audit, and this is something that you need to take into consideration, how to expand the services that you provide in addition to the audit, because we see that there is value and there is demand. For example, valuation, for example, transfer pricing reports, for example, anything else besides the audit. We have seen that there is an increased demand on it. In addition, over 80% of the internal audit teams are already employing cloud technology. So, of course, the COVID-19 pandemic, it has increased the pace of the technology that fits in the organizations. And bottom line, you need to implement technology in your organization if you want to stay and keep in pace with the rest of the world within our profession. So the integration of the data analytics and the technology in the audit process, it does continue to evolve. And as I said before, the auditors, we need to stay up to date with the latest tools and the techniques for analyzing the volumes or becoming more efficient and accurate in what we are doing. Of course, by doing so, we do have a cyber security risk. And by using more and more technology, we can identify worldwide that there are cyber attacks, and we need to implement solid IT security in order to protect our systems from the cyber attack. So, as I said earlier, the COVID-19 pandemic, it has accelerated the adoption of the remote auditing practices. So we have seen that there is a shift from the normal working to the remote work. Of course, internationally, the truth is that a lot of research, they identify that there is not so much, it's a lot of issues in terms of remote working. A lot of employers, they identify that the people now, they are not so efficient when they are working remotely. But the truth is that it's something that we need to accept. Remote work, it has come to stay, in my opinion, and we just need to embrace it and find ways how to improve the efficiency, how to improve the communication between the teams, and implement certain controls. So having said that, though, a good percentage of the teams, they identify certain problems with this. So 38% of the auditors, they are facing difficulty in moving to digital processes, and this is so-called change management issues, the concept. So even sometimes in our organization, we can see that when we're trying to implement new technologies or when we are trying to push things into remote working, we do face some issues, we do face some difficulties. Even when we're doing this webinar, which is, it's not the same as a seminar, but with time, I believe that we can eliminate these issues. So 36% of the auditors, they consider that they're adopting new audit technology as their main challenge. So basically, one of the 36%, they say that the main challenge that they consider is adopting new audit technology. In addition, 38% of the accountants are intimidated by using new technologies. For example, we have an accounting software in our company that we have been using for more than 10 years. And in the last year, I'm trying to implement and to move to another accounting software, which is more technologically advanced. For example, it has a capacity to connect the banks with the accounting software and perform automatic transactions and double entries from the bank to the accounting software. And I have found it that it is a challenge for us to change one system to another system, one accounting system to another accounting system, and it's something that we just need to approach it in the right way. So, of course, this is something that we will see also throughout our webinar today. We need to stay in touch with the regulatory changes, and it is crucial that we're gonna adapt to these changes. For example, there is a transition to the new revenue recognition standards, and the new revenue recognition standards, it has been a very let's say challenging change for us, because sometimes we can identify that there are not so much clear answers. There's a lot of gray areas. There is a lot of professional skepticism that needs to be implemented in the new changes. And that's another challenge that we are facing, the fact that as the world is becoming not so straightforward, then the new changes in IFRS, they are also not so straightforward, and more professional skepticism needs to be used. In addition, the audit quality and the peer review, it's another constant challenge that needs to be taken into consideration to find fraud. That's a challenge. How we're gonna communicate that, that's another challenge. So anything related to fraud nowadays is becoming increasingly important, and to deal with it, it's also a huge challenge for us. As I said, by by having more complicated structure nowadays, for example, as derivatives and securities, we do need specialized knowledge and expertise. So, for example, I remember the IFRS book 20 years ago. It was a small book like this, but nowadays it has actually 2 huge books. So it's only from this you can understand that times are changing, things are becoming more complicated. How to approach the different cases is also becoming more challenging. And of course, we do have the multinational companies, which they offer need audits that will comply with different sets of international accounting standards. And also, that's also a huge challenge in order to have a good coordination and consistency with it. So, about 4 years ago, when we went to London, and we took part in the Forum of Firms discussion in London. There they were discussing what are the biggest issues, and to be honest, from that time it really surprised me that they were discussing that the most big problem that they have is to find new talents, to find to recruit good employees, good quality employees, and also to retain them. And at that point in Cyprus, we didn't face that problem, in my opinion, because we had a huge pool of individuals that you could employ. They had a good quality, and for me, I didn't see it as a big issue. But nowadays, I really understand that perhaps the most important challenge that we face in our organization is to recruit top talented people and to retain them. And as we can see from now, some numbers here, more than 90% of accounting firms and internal audit departments, and point out that the fastest growing challenge they are facing today is hiring and retaining skilled accountants and auditors. So by looking at the companies now, I can say with certainty that it's a huge challenge for us to find new employees and to retain them. And again, we hope, because obviously for the time being we are not in the scope of Big Four, but I believe that by adopting new technologies and keeping up with the developments, that is the best way in order to attract and retain new talent, but in addition also to improve the communication with the clients. So that's the end of my short presentation. It was just a summary of the main challenges that we are facing in the audit field, and some small points on how to mitigate those challenges. If you have any questions, please, you are welcome to ask me. No questions? Okay.
Коллеги, если есть...
Yeah.
Just a second, please. If you have any questions, you can ask for permission and we'll let you go online and you will ask your question directly by voice. Michael,
Yes.
I think you can go
Thank
ahead
you
and
very much.
introduce our next
So
speaker.
the next speaker is Mr. Serhan Berger. It's an IFRS expert from Itimat Global, Turkey, and he will doing a presentation in relation to IFRS sustainability disclosure standards.
Коллеги, у меня просьба, не щелкайте, пожалуйста, презентацию, я не могу включить нужную.
Colleagues, I apologize. Somebody is pushing arrow buttons on his keyboard, and that's why we are going from one slide to another all the time. Stop doing that, please. Don't touch your keyboard for a second. I'll set it up, and we'll start with Serhan's presentation.
Yes, so Mr. Serhan, the floor is yours.
I'm just waiting that the presentation is appearing out. Okay, thank you very much. I would like to thank you, Michael, for the nice introduction. I would say calling me as an expert in IFRS, it's a nice compliment. Thank you very much for this. I'm trying to do my best. The new standards attached to IFRS regarding the sustainability is for me a huge change in the reporting system, because for me the sustainability is a great change in the world, because sustainability forces the companies, the communities, the governance to act accordingly and responsibly. That's very important. Last year in the global meeting in Istanbul, we have discussed about it was a presentation from us about the new methods on management consultancy. And we shortly mentioned about the circular economy and sustainability. In that case, we have mentioned. Okay, let me move my slide first. Yeah, and that was a short. Oh, sorry, too much. I have to go back. Let me arrange this. Yeah, that's it. So that was the picture we presented last year in the global conference about sustainability. And we consider sustainability, at least from our point of view, it shouldn't be just numbers or representations of some points regarding the carbon emission or carbon footprints. Sustainability is more than that. If we have to report according to the IFRS about sustainability, first we have to understand what sustainability is. It's not just the climate change. It's not just the carbon emissions or carbon footprints. That's only a small part of it, very small part of it. You see in the picture that we split the sustainability in three P's. First one is the people, second one is the planet, third one is mostly say profit, but I would rather call it prosperity. That's the main issue. And if we continue to stop with the sustainability sub headings, we should rather come to another point that the planet should include the climate, should include the biodiversity, should also include the circularity. On the people side, as sustainability, we should rather consider our own employees, supply chain employees, and the community. And on the profitable side, customer value, the profit itself, and the brand of the company is also part of the sustainability. That's very important because when we right now discuss with the companies about the sustainability, we just speak about the climate changes. Nobody cares rest of it. And this is a real contradiction what the people dealing with sustainability and the audit people or IFRS people. Therefore, I want to show you the main principles of sustainability given by the United Nations, how they display it, and I just split it under planet, people, and profitability, so that we can understand what we are dealing for. If we just start with the standards, they just ask some numbers. I will explain it in detail later. And this is not the total core of sustainability. If we just stick on the numbers and just some reports on sustainability, we should rather leave it aside. We shouldn't deal with it. But if we do really accept and apply sustainability first with ourselves as an individual, then as a company, then we can discuss about reporting about it. So let me see what we can see about the 7 principles. When we look at the, let me change the slide. Yes, it's coming. For instance, if it's from the 17 principles, the Article 7, which is the affordable and clean energy, the renewable energy, is one related with the climate. The climate actions is also related with the with this climate versions. If you go to the United Nations site about sustainability, you will see under each article several targets. It's end up more than 100 targets to achieve through the sustainability, and only a very small part of these targets have been mentioned in these sustainability standards. I hope it will change. It will be more complicated. It will be more complex, but all included within these standards. This is the first one on the climate side. About the, again, biodiversity. Let me change the slide. It's a little bit slow. Yes, it's coming. On the we can see life on below water and on land is also a mentioning point. So in that case, if we apply the reporting sustainable side on the standard side, our report should also include our impacts on life below water and on land. That's also important point. Also, the other issues or targets on the circularity, again, the renewable energy, responsible consumption and production, and clean water and sanitation we can include on this point. That's how these 17 principles have been discussed. But more importantly, more than climate and circularity, we should also focus on our own employees. Michael just said as one of the biggest challenge is to achieve high quality talents for audit and accounting systems. And this is also one of the answers, how we can achieve and attain and keep these people working on audit side or accounting side. Unless we do not reduce the inequalities, unless we do not give them the chance with good health and well-being, unless we do not consider the gender equality, I don't think that we can keep for a long term with the high talented people in our sector. So this is also a part of sustainability. Sustainability is not just the carbon emissions in that case. I'm just repeating it, but that's what we have to understand about sustainability. On employee is required, but not enough. We should also change the supply chain employees. you may have faced at some of our clients, especially in Turkey. We have several clients working with international or multinational companies, and these companies have been auditing their subcontractors with their conditions of work. And in that case, they really check what are the real working conditions. And this is not only valid for Turkey, this is valid for the whole world. And during the sustainability, the production on the subcontractors has to have standards. Otherwise, there would be a real bad competition conditions, unfair competition conditions. One of the major points that sustainability has been discussing on it. Also, on employees, supply chain employees, and community is also employed. And on the sustainability, we should also focus on poverty, focus on hunger, focus on education issues, sustainable cities and communities, and most importantly, we should have to learn all together, all over the world, in peace, justice, and strong institutions, leaving no room for inequalities or actually the extortions of several human rights. That's one of the major points. And finally, if we talk about sustainability, there is a part of sustainability which has been also implemented in the world more than 50 years ago, and this is the financial side, the commercial side. In each country, the commercial law requires that the companies are sustainable, and the expectation of the over the year life cycle of the companies is forever. How can we do that? And this is the question of decent work and economic conditions. That's what we can create as a company, and that's what we can offer to the community, and that's what we can receive as a result, talented people. And that's why these first two standards of sustainability are very, very important. If we can combine the reporting standards with these 17 principles of sustainability. Customer value is one point, definitely. We should also focus on the profitability, profitability, which is again combined with the decent work and economic growth. Plus, we should also focus on the industrial developments, innovations, and infrastructure. And this all has to be rather towards prosperity than profitability. That's the main issue of sustainability. And finally, we should combine the sustainability reports with the points which creates the brand value of the companies, and this can be achieved through the partnership for the goals, especially for the sustainability goals. And if we can, after we having discussed these 17 principles of the sustainability, we can come back to the IFRS reporting side. Please keep in mind that the reporting should give an answer to these 17 points, which have included already more than 100 targets or sub points under these principles. So, what are the origins? If we come back to the reports, the International Sustainable Standards Board, established by the IFRS Foundation, issued a comprehensive global baseline of disclosure standards to facilitate the consistent and comparable disclosures on risks and opportunities related to sustainability and climate, referred to IFRS S1 and S2 respectively. The standards address long-standing reporting challenges, equipping companies and investors to better understand performance and comply with ever-evolving regulations. In that case, you see there are several boards dealing with the issues. Sorry, I too much, right? Okay, so the one of the boards we should follow is the International Sustainability Standard Board. The second one is the Sustainability Accounting Board, Task Force on Climate-Related Financial Disclosures, Climate Disclosure Standards Board, and the GRI, the Global Reporting Initiative. The last one, the GRI, also set up several substandards, which is right now used more than 2,000 companies for the last 5 years. And this is actually the base that the standards come from. The standards helpfully are not entirely new. They integrate certain existing standards, such as SASB, the TCFD, and all I mentioned here. Accordingly, business and investors will not need to fully revamp their reporting and tracking procedures to comply with the IFRS standards. Since 2020, that's a very important number, 2,839 companies have made sustainability-related disclosures using the SASB standards. Given the fact that the newly introduced standards integrate these SASB standards, this development will require minimal adjustments in established reporting process. Notably, IFRS S1 and S2 are focused on financial and material environment, social and governance, which is the ESG, which is also one of the very important issues, especially in the European Union, risks and opportunities that affect the overall bottom line, as opposed to GRI, CSRID, and other reporting standards that are double materiality based, that is also requiring consideration and disclosure of how a company's operation impacts in its ecosystem. Even it's a contradiction between these S1 and S2 and other reports. The contradiction is on a very small part, which I mentioned lately. So
Sorry,
when we look at the
just to interrupt you, you have about 4 minutes left.
No problems. I'll finish in 4 minutes. No worries about it.
Excellent.
Okay. So when we look at S1 and S2, we'll see two separations on, let me change the slide first. Yeah. Okay, on the S1 side, we will have to report the sustainability risks and opportunities. On the S2 standard, we will go into more deep details. How an entity manages the potential negative effects of climate change, including the physical risks, transition risks, and events, and also the opportunities that impact prospects over the short-term, long-term, and medium-term potentials that we have. Finally, if we go further to the scope of disclosure, we'll see that the S1 deals with the governance, strategy, risk management, and information on metrics. And the difference between S1 and S2 comes on the information on metrics sides. S1 is purely related with the company metrics, but S2 requires the cross-industry, industry-based metrics, qualitative and quantitative targets, and also deals with the metrics set by the entity or required by the law. So that's two different sides of S1, S2. When it comes to the location and disclosures, for an issuer either required to or elected to adhere IFRS S1, S2, disclosures are encouraged to be included in general financial reports, including or in the annual accounts. That's how this report should be. On the flexibility side, when we come to the flexibility of this reporting, you will see that these two standards are designed to elicit comparable information regardless of accounting standards applicable in different jurisdictions. That means if we run an audit or if we run an IFRS in different countries which have different gaps, that might be a problem, but these standards are totally applicable to all the gaps. So there is no issue or contradiction with the gaps in that case. And the timing, it should be the 1st of January 2024. So that's what we should be careful of. We have to be ready. And it's not only the reporting side. The reporting is more or less defined, but the timing, we have to adapt ourselves how we can produce these reports. My main question, which might mean amendment to challenges to the audit facing, which Michael mentioned earlier, is how we can adapt ourselves to sustainability standards, because there is only 3 months left that we can start with the reporting. And the interoperations and relationships with these standards, there's fine. We won't face big problems, because there are already several rules applied or legislations applied in the countries. This reporting is also mandatory in European Union, UK, Australia, US, and also some are under CSRD, the Corporate Sustainability Report issue in the USA, in the European Union. They are still on implementation, but it will come soon, and we have to adapt ourselves to this also. And okay, finally, again with the reporting relationships in interoperability, it's very fine. We just have to understand, again, as I said, the relationship with the real sustainability principles, because we have to somehow report on the standards, how to elicit sustainability and climate related information for the stakeholders, especially on the investors. This is the first point that have been brought onto picture, but it should also include the other versions. So when I say when I try to shortly summarize what these sustainable standards are, my conclusion would be that sustainability reports or the standards should be much more than the climate impact, and we should really understand these 17 principles of sustainability. Otherwise, it won't help us at all. And on this conclusion sites, I'm looking forward to hearing your questions if you have any. Otherwise, in order to keep my 4 minutes, I would like to thank you for listening to me, and have a nice meeting.
Thank you, Mr. Serhan, for a very informative presentation, and we are all certain that the sustainability
Я вижу, что
standard
точно есть вопрос у
is
Ильгиза.
something that
Ильгиз,
is going to
правильно ли я
grow.
понимаю, что ты не можешь выйти в эфир? Потому что я тебе нажимаю приглашение в эфир, и ты должен нажать принять приглашение. Или можешь нажать на кнопочку начать вещание и выйти в эфир, и ты тогда выйдешь.
So, if you have any questions,
Ильгиз, выйти в эфир, начать вещание. Ты нажимаешь и выходишь в эфир.
Yeah, hello?
hello, yeah.
Yes,
Yeah. Michael, can I ask a question?
sure.
Yeah,
Hello.
Serhan,
Hello, Jim.
thank
Hello.
you. Yeah, thank you for your presentation. Actually, so far the IFRS standards, the International Financial Reporting Standards, are pretty much successful, I would say, because they are widely used in the different countries in the world. One of the reasons why these standards are so successful is their comparability, plus the fact that these standards ensure the fair presentation of the financial data. So far, in the field of the sustainability reporting, we used to have the different reporting frameworks. We used to have the different sustainability reporting standards. And actually, through my review of a dozen of such reports, I noticed that even on the one reporting framework, the companies reporting under the same the sustainability reporting framework, like, I don't know, one of them, the results are not that much comparable, because there is an option to disclose, like to make a focus on the governance aspects of the ESG practices, or put more stress on the people side. And actually, you're just taking the two reports within even one industry, let's say metals and mining, and you cannot just compare which of these two companies is doing more on sustainability aspects, right? And so my question is, do you believe that the new ISSB standards, which are already put into the effect, and the future standards would help to ensure the comparability and the fair presentation of the sustainability issues? What's your opinion on that?
Okay, Michael, the question is to you, but do you want me to answer this question?
I think the question is to you because you just did the sustainability
Yeah.
standard. But I will comment on
Yeah.
it once we finish. Yes,
Okay.
Mr.
So I just opened the scope of the disclosure. The question is a very important and correct question. As of today, there was no one standard. Most of the companies tried to apply several different standards. The one used mostly the GRI standards. And the S1 and S2 is a unification of these standards. As you see, once we start with using this S1, S2, we will report more on the governance. And in this governance, the answer is about how we govern the sustainability in our company on the financials, especially based on the financial impacts, then the strategy, then the risk management, and the information on metrics and targets. At the very beginning, I totally agree with you that it won't be comparable. But as we come close to 2030 and 2035, where there are certain goals and targets have been set up, these reports, these standards will be also comparable. Because right now, even the companies have been spending too much on sustainability. They are just pretending to be sustainable. But the targets, if the governing parts of the world try to push them to follow up the rules, it will be more comparable. But as of today, you cannot compare it. That's what I can tell you.
Very good. I think
Thank
just to sum it up, because we need to move to the next one. I 100% I agree with what Ilkis said in the beginning, that the IFRS basically is pushing this comparability between different organizations and different regions, and I think this is one of their main target, in order to be able for the different stakeholders to have in their hands a different set of accounts, but being able to compare them. And having said that, since this is a new standard that is coming into force, obviously there are some discrepancies and some elements that they cannot be compared, but I believe that in the near future, like Mr. Serham said, that this is going to be fixed and this is going to be mitigated and in order to be more comparable. But thank you so much, Ilgiz, for your question. So, Mr. Serham, thank you very much for the nice webinar. So let's move on to the next presenter is Mr. Sergey Mulikin, the Deputy Head of the Department of Methodology and Quality Control. And today he will present the ISQM1 information and communication. Mr. Sergey, the floor is yours.
Добрый день. It's a wrong presentation. Yeah, we'll start with this one, right. Fine, that's it. I can see my presentation. I would like to focus on the practical implementation of the requirements of ISQ1. I'm sure you know the theory behind it and you know how it works in theory, but I'll try to talk about some hands-on specific features as we try to implement these standards. You might find it useful, and I will demonstrate some of the samples, some of the case studies at the end of my report. So I'll try to give you less theory and more practice. So very briefly on the requirements that we can see in the new standards, then I'll say a bit about the changes on the framework itself that's supposed to be put together, on the companies, on the stakeholders, those who must communicate in between on. I'll give you some of the case studies. I would like to demonstrate ISQ1 and the powers that lay out the procedure, the methods. I'd like to draw attention to the last line, but I don't see it here. I don't see it from my computer. Well, I hope you can see it. It's an international code for chartered accountants. Well, we should not forget about it because it defines some important duties. It's the International Code of Ethics for Professional Accountants. I don't see that, unfortunately. Well, you might need some standards on how to work with the previous auditor. You need to get permission from the customer when we take over auditorship, or if we are the previous auditor and we need to hand over also when we work together with those charged with governance, when the auditor might see a threat on remuneration, like 15 or 30%, we need to control these issues as well. So we shouldn't just have this silo mentality and work on just standard one, ISQM1. We need to perceive the system in a comprehensive manner and a 360-degree view. We need to understand that there are other standards which set forth specific circumstances and specific rules of communication. Let's look at the amendments to ISQM1. I'm sure you've seen it. We have a risk-based approach and the information system. That's a standalone unit. Well, ISQC1 had some only a few items on this. There were just some elements in terms of communication related to independence matters and responsibilities of the engagement partner. So it was quite limited. ISQM1 now shapes an understanding of an information system. It provides for the subjects of interaction. You've got these service suppliers, a network, service providers, and network. So network was previously used in terms of independence, and this time there's supposed to be communication. The exchange of information within the system networks and to service providers. So from top to bottom and peer-to-peer interaction as well. And now on goals, I think this is the most important area. So just a few ones. So we've got targets for each of the components. We've got targets for the risks, for example, and according to the manual, the targets must be perceived as kind of metrics, and as you achieve them, we ensure quality of audit. However, if we fail to assure them, then risks might emerge. Well, we cannot actually equate targets and risks, but all of the targets that are supposed to be set forth in the standards concerning specific components, they must be followed up with the identification of risks. So the target somehow defines the risks or entails the risks. That's what I wanted to point out. So it's not just, declaration like it's good that the system, that the framework would match this or would be in line with this. No, it's kind of binding. And I'll try to give you more practical insights later on. Do we have any questions right now on the goals? Fine, moving on. So here we've got the stakeholders. So we've got staff, we have service providers, we've got a network, and then external parties. The network and external parties is something it's like outside. So within the network is when you communicate information with the firm and the personnel, and then you then have third parties, like, yes, service providers and the external parties will be the outside perimeter third parties. Now on service providers.
New term in our practice, but the standard provides extensive comments, so it's easy to see who service providers are. I'd like to point out one point though. When we talk about service providers, there are certain independence requirements for them as well, and we need to make sure that they're professionally competent. Communicate with external parties. Here the situation gets more tricky, because when we talk about legal requirements and standards, the situation is pretty clear. But network requirements, I think this is clear as well. But if we go to the lower line, three rectangles at the bottom, this might be difficult to understand, because transparency report, direct conversations with external parties. This is not just about laws and directives. We also have to consider expectations of various parties, and we have to use our professional judgment, and we have to provide this information about quality management system in a company, our response to certain results of external oversight by the regulator, our reactions to monitoring. So this is a matter of judgment. Now I'd like to move on to practical implementation. And we have mentioned some of these things, so there might be some repetition here. There are two forms. I will show you the second one. It's a kind of checklist that you perform as part of your audit. You can call this a matrix. And what we have here is a combination of all sorts of information interaction within the company and with external parties as well. The format of this matrix may be different for different companies. I don't know if it's mandatory. I cannot recommend it as mandatory. It's a debatable issue. But anyway, that's the approach I take. So we believe that as part of implementing the first goal, the information system, collecting, processing, and retaining data, we should know and understand all the types of information being processed, what kind of data we have to collect. For example, there is an authorized body fighting money laundering, terrorism, and extremism. So if you go to the website of this government agency, they have a large number of lists published on their website. And those include offshore shell companies that do not follow FAT recommendation, a list of extremist organizations and countries, a large number of lists. So we have all this data. And an auditing firm should be constantly monitoring this information. And if you need to, you have to update your policies and communicate these changes to your auditors when they work with the clients. So this involves a number of actions that you have to take. And this data is passively available on the regulator's website. And we should have our own procedure. We should identify people who will keep an eye on this data. We should identify how this information will get into our database, how often we have to check on this data. Let's go through this table. I just give you an example here. It's a specific example from how a firm might respond to a particular kind of data. Let's say you're checking a client and you have found a transaction that, according to the regulator, is a red flag transaction. So you, as an auditor, are required, and I think this should be part of regulations or internal guidelines. What do we do when we encounter such a situation, such a red flag situation, as defined by a specific law? This data is provided on the website of a federal agency. And confidentiality requirements for this data. When we report this data, our customer or client should not know about this. We only communicate this information to the federal agency. So we need to identify the system component affected by this information, and if it involves, so probably this information should be communicated to, well, actually, I thought Naila was going to speak ahead of me talking about risks, but anyway, I think she will also show us a matrix of risks. And if it's a major risk, then information possession and information control should identify quality risk as well. It was difficult to read this standard because when we talk about quality management risks, I understand, of course, that we are not only talking about quality management. Let me give you an analogy. Within the Russian auditing community, there is this joke. I'm not actually sure if it's a joke or not, but sometimes people say that if you have found significant violations and significant reporting of a client, this means that the quality management system has significant errors. So in this case, my analysis shows that this all has to do with the quality management system. So there are risks practically everywhere. If an auditing firm did not take action as specified by law, you can face serious consequences, including the termination of your operation. So I think it's a major risk. So this is the kind of data we should keep an eye on. How often this should be done? It depends. We lost the audio temporarily. There is no sound from the speaker. There is still no audio. Is it just me? For some reason, I cannot hear Sergey anymore. Could you please write in the chat? It's everybody. We all cannot hear him. Sergey, can you hear us? If you can hear us, please refresh your page. Maybe press F5. Refresh your page. We lost you, Sergey. Could you please reconnect? Because it seems at the moment that we lost you. Sergey, are you there? Sergey, could you please write in the chat if you can hear us? At the top of your screen, there is this icon, chat. Please go to the chat and let us know if you can hear us right now. Okay, let me remove Sergey from our webcast. I think I can do this as the administrator, as the host. Just give me a second. Sergey, if you can hear me, could you please click on the Start Webcasting button? Click on the Start Webcasting button.
Okay, because
there is some kind of technical issue with Sergey.
We are already 22 minutes for Sergey's part. Maybe we can move on to the next presenter.
Yes, let's do that. Let's move on to the next speaker because we've got an issue with Sergey and his internet connection. So let's go to Naila. Actually, Naila was supposed to go third, but we got ahead of ourselves. So let's go back to Naila.
All right. So our next presenter is Naila Musina, is the director of the LLC auditing company Audit One from Uzbekistan. Naila will make a presentation as regards the ISQM1, the firm's risk assessment process. Naila, please, you can start your presentation. And let's stick to the 20 minutes point. Thank you very
Вам
much.
слово. Ваша презентация на экране. All right, I think you can hear me. Hello. I will talk about risk assessment process. Of course, maybe my presentation will not be as interesting as other speakers because I'm a newcomer here, but still, let me present my deck of slides. So let me briefly go over the table of contents. I will talk about risk management, risk analysis, common kinds of risk. Then I will talk about risk assessment procedures, other auxiliary actions, and finally, I will talk about the risks of significant distortion and how to identify them. Okay. Risk assessment is an important component of any business strategy. And an entrepreneur, especially a new one, has to plan various processes in their company and also consider what kind of problems and risks his business may encounter. A good businessman should not only be able to resolve problems, but also anticipate them. For example, there might be a sharp decline of demand for the products of this company, or problems with the equipment, with the machinery, fires, disasters, and various other factors. That's where risk management can help you. Risk management is a tool that can help you anticipate such negative events, negative factors based on data. The key purpose of risk management is assessing and classifying various risks that your company may encounter and plan how to minimize them. Risk management is a way to avoid the loss of money, property, equipment, and to make smart, proper decisions, increasing the profitability and goodwill of your company. Risk management is directly related to analytics. You need proper risk analysis. What does it mean? What is risk analysis? It's a process where you identify various risks and how important this or that risk is, and how to mitigate negative effects of various risks. And we can have two complementary kinds of analysis here: qualitative and quantitative analysis. Qualitative analysis identifies factors, areas, and types of risk. For example, the financial position of a company can be assessed as follows: liquidity. So you review the assets of a company if there is excessive stock of materials or products, etc. Profitability. You can compare the company's profitability against the average profitability in this industry. Then you can also look at the debt level. If we're talking about the terms of less than 30 days or more days. Also, loans. If the company is unable to operate without using loaned cash, this increases the risks. If you need money to expand your business, that's the average level of risk. And if a company only uses short-term loans from time to time, this means that risk level is low. And then you can use the results of qualitative analysis as a basis for quantitative analysis as your next step. Quantitative analysis gives you specific metrics, gives you numbers with which you can provide your assessment of the risks that the company faces. And you can know what kind of losses you may encounter in this or that situation, and then you have to prepare a plan how to minimize these losses. What are the most common types of risks? Financial risks, number one, natural calamities, number two, strategic risks, and operational risks. Let's talk about financial risks first. These are liquidity risks, credit risks, and market risks. Operational risks, environmental risks, system risks, technology risks, and personnel risks. Personnel risks, this is the shortage of proper personnel with proper professional skills, or maybe certain changes among key employees, including management. Next. Credit risks. Violations by partners, delays in deliveries, issues with companies operating on the securities market. Next, shortage of demand, volatility with the currency, exchange rates, etc. Also, legislative risks, when there are changes in legislation, reporting systems, etc., etc. Then next, technology risks, environmental damage, technological disasters, and mistakes when planning construction. These are technology risks. Next. Risk assessment procedures. These are procedures that help you understand the entity and its environment. This includes the internal control system and identifying significant distortion risks. This may be an honest mistake or intentional. So what the auditor has to do is you have to understand how certain processes work within the organization, how they assess business risks, how they assess the probability of the various risks, and what actions are being taken to mitigate or minimize those risks. If the company does not do that, or only does this from time to time, then the auditor should talk to the management and ask them whether they have identified significant business risks that should be reflected in financial reporting, and if the company has taken specific actions to address those risks. Risk assessment procedures and auxiliary actions. This means sending memos to management, internal audit departments, if there are any, and other personnel within the entity, within the company, that can help you identify risks of significant distortions in case it's intentional. So, memos, inquiries, B, analysis, and C, monitoring and inspections. Once you have sent these memos and inquiries that the auditor thinks are necessary, you also need to identify what is considered significant according to standard Article 321. Then you have to consider the nature of the accounting policy, how it is applied, and how information is disclosed in financial reporting. You have to consider all these factors to understand the environment. Next, you have to identify the areas that may require special attention of the auditor. For example, transactions between affiliated parties. Also, allowances made for the purpose of continuity in the company's operation, uninterruptibility, etc. Also, response procedures, including designing and providing additional auditing services for obtaining sufficient auditing evidence, assessing the efficiency of received auditing evidence, including written and oral statements by the management of the company. The information obtained by these procedures can be used by the auditor as auditing evidence to confirm the risks of significant distortions. Organization and its environment. The auditor has to understand the following matters. A, industry-specific and regulatory factors and other external factors, including financial reporting preparation concept. What does it mean? What this point talks about is industry-specific factors. The conditions you have within the industry, competition, relationships between suppliers and customers, the level of demand, productivity, the pricing situation, cyclicity, whether operation are season specific or not, energy supply, energy costs, the nature of the entity, its operational activity, its ownership structure, its corporate management structure, the types of investment performed by the entity or planned by the entity, the structure of the entity, and funding arrangements. This will help you understand the financial position of the company and what kind of data should be presented in the financial report. Also, the accounting policy of the company and changes made to this policy, the goals and the strategies of the organizations and the business risks that they involve. Also, assessment and analysis of financial results of the company. Next, identifying and significant distortion. The auditor should be able to identify and assess the risks of significant distortions. Again, this happens at the level of financial reporting, and also this includes the remaining accounts, information disclosure for further auditing procedures. Point A, financial reporting level. These are significant distortion risks. That applies to financial report in general. This kind of risks are not necessarily risks per se.
The risks that you can identify just based on the balance on your accounts or the disclosure information, well, they can multiply the risks of significant distortions. Well, let's take internal control, for example. You got financial reporting risks. You might have, again, you might have this significant accounting misstatement due to some lack of action or abuse of power. Financial accounting risks could emerge due to the failings in the operational environment. Although there could be a second reason, like a worsening of economic or financial conditions, or maybe your management is incompetent. And that can have a domino effect on financial reporting, and that might trigger a response by an auditor, and then you will have to assess the risks. Now, as we get the judgment, as we get auditor opinion on which risks are major, the auditor must review the following: whether this risk is a risk of nefarious operations. Is this a risk due to any major events in the economy, in accounting or other circumstances? Whether the transactions are complex. They could be unusual. We have to, figure that out. Is that risk related to transactions with related parties? As we assess the risk related to financial information, particularly those assessments that entail a wide range and uncertainty, what is the level of bias, subjectivity in such assessments? And also whether this risk is related to major transactions that go beyond the core activities of these organizations, or transactions which seem or which appear to be unusual or bizarre.
Ms. Naya, I think it's time to wrap it up because time is run out.
Время заканчивается, пора заканчивать. Fine,
you.
thank you. I will wrap up. Some key takeaways. Throughout the audit organization must ensure uninterrupted process, and you have to send requests and queries during the audit to shape the right audit opinion. That's it.
Thank you, Mr. Naya, for the very interesting presentation.
Thank you so much.
Any questions in the audience? If not, we can move on because we are a bit behind the schedule.
Michael, we need
Yes.
to give the floor to Sergey. Sergey
Correct,
needs to finish his statement.
Please,
To finish. Есть ли вопросы, коллеги?
I think there are no questions, so perhaps we can move on.
Sergey, can you join us? I don't see you online. Sergey, are you somewhere around? Sergey, I'm here. right, we'll get your presentation back. I think that's where you finished off. Yeah, thank you. I'm so sorry for getting out of this webinar. It's not, I'm not to blame, it's my Wi-Fi that is to blame. Well, Naila brought up an important topic on risks. And the panel that we have today is more about strategic level. So maybe going forward, we might present more targeted information, more specific information. And my second point on what Naila said, she raised a very complicated issue, a very essential one. And I think it would take a week to explore all of these items. Initially, I thought that we would talk more about the essence of standard one of, ISQM, on the shift of paradigm. It's no longer control, it's no longer ISQC, it's ISQM management, proactive, risk-based approach. So as I looked at the targets for every company about priorities, I thought the focus
Yes,
would be on
Mr.
risks.
Sergey, because we are out of time, can you please
As
make your
part
conclusion
of
so we can move on to the
ISQM1.
next presenter? Unfortunately, we are way out of our timeline. Thank you.
So we now move to
I
Haro, I
didn't hear
guess,
the
right?
comment from Mr. Sergey,
So Haro.
but anyone has a question from either Mr. Sergey or
Haro.
Mr. Nailia?
There were no comments to what Sergey said. So Hara, can you hear me? Hara, are you online? I hope you're
Yes,
with
I
us.
am. Thank you.
Excellent. So we're gonna move on to the IFRS part of our webinar. So Mr. Haroret from our Dutch colleagues, also GAP and IFRS expert from KC Audit in Netherlands, and will perform a presentation as regards the IFRS 17 insurance contract. Mr. Haro, just a small recommendation just to stick to the 20 minutes. Thank you very much. The floor is yours, please.
Okay, thank you very much. Well, thank you all for listening to me and getting a taste of what is going to happen in IFRS for this year and for next year. I have two parts in my presentation. The first part is around what is happening for 2023. So these are the things that we need to be to make sure that we understand how they will work out this year in the financial statements of our clients. And then I will also look at what's going to happen for next year's, and that's more an advice to already discuss things with your client or to already look for what the client does in this area. Perhaps the great news is that there's only one major standard that is new this year, and that everything else is just some more clarifications on existing standards. The main standard for this year is IFRS 17, insurance contracts. I'm not gonna tell everything about IFRS 17 today, because that's a project that took the insurance companies 5 years to complete. So even if I want to talk about the main principles, I will have to stay very global because otherwise we're running really out of time. So my purpose today is to give you a small overview of what is going to happen. At least you need to be able, after this session, to identify whether you have an issue with your client. So if you're able to do that, then you know when to go to either your technical department or to see with FinExpertiza whether we need to set up a deep dive session on one of the standards, and then probably in particular IFRS 17. IFRS 1, IAS 1 is a small change, IAS 8 is a small change, and IAS 12 is a clarification because of the OECD rules that have been published but are not in effect yet. So let me start with the main dish, which is IFRS 17. The thing is that due to the definition that the IASB has chosen for an insurance contract, it means that a lot of contracts that we would think are not insurance contracts are actually classified as an insurance contract under IFRS 17. It means that you have to give compensation for an event where the impact can be significant, and the event has to be uncertain, and there should be an adverse effect on the policyholder. What does it mean? A very simple example that you will encounter with your clients, even if they are not insurance companies at all. I have outsourced my IT. There's somebody who's making sure that my network is okay, that my servers are okay. And what they will do is, if something is damaged, they will replace it for free. Because in fact, they see the IT as kind of a service. By ensuring that everything will be operational at 95% of the time, the supplier in this example can actually give an insurance to its client that all the material will be replaced at their cost. So in that way, they are an insurance company towards their client. So that means that even though you don't expect your client to be an insurance company and to have insurance contracts, you really need to make sure that under IFRS 17, certain contracts do not fall under the definition of an insurance contract, because then it also means that you have to apply all the accounting for an insurance contract. Luckily, the IASB has seen that sometimes it's a little bit much. So they have given a number of scope exceptions under IFRS 17 where you don't have to apply the standard. Warranties is one of them, because you can deal with it under IFRS 15. And then they said in employee benefit plans, which are also kind of a guarantee to your employees for their pension rights. And then there's a number of other guarantees or contracts that they say, okay, you don't have to include that or you don't have to apply IFRS 17 for these kind of contracts. Furthermore, the entity can choose for insurance contracts to do IFRS 15 or IFRS 9 if that is more applicable to the contracts that you're looking at. Finally, IFRS 17 requires to split insurance contracts by their components. That's something that we already know from IFRS 15, where for revenue recognition you also need to split contracts between the separate components of the contract. That's what we see under IFRS 17. And that also means that, for instance, if you have an insurance contract where there's a separate investment component, and we know a lot of countries where due to tax reasons, investment contracts have been labeled as an insurance contract, then you need to split that investment part out of the insurance contract and only calculate the IFRS 17 consequences for that insurance part. This is a very nice picture that the IFRS itself created, or the ISB itself created, to get a feel for what it is under IFRS 17 to account for insurance contracts. What it actually means is that you're always going to look for, on the one hand, what do I expect to pay under the contract? On the other hand, I will look for what am I supposed to pay for events that already happened, but that I do not know about yet. Think about a weather event where we had a big storm and the claims for the storm still need to come in because the storm just happened. But the event already happened last week. So I will have future-looking liabilities. I will have liabilities for things that already happened, but where I do not know whether there will be claims. And there will be something called a contractual service margin, which is actually looking at, okay, I'm looking at all the cash flows that I will that will go out of my company. I will look at all the assets that I have for this contract because the client already paid premiums to me. And then I have a profit margin, and then I will allocate that profit margin over the term of the insurance contract. So for non-life contracts, usually that's not that relevant because they will usually expire within a year. But if I look at life contracts for pensions, for instance, it could take 30, 40 years before I will have to pay out anything on the contract. So I will postpone the profit on that contract through the contractual service margin, and I will realize a small part of that contractual service margin every year during the contract. This also means that if you're looking at a financial statement of an insurance company, this contractual service margin is actually saying a lot about their future profitability, especially when it's a life company, because it can take a long time before that profits come into the P&L. On the other hand, we can see the P&L items where you have the insurance revenues and you have the service expenses. For calculating the liabilities on the left-hand side, what is important is, on the one hand, the discount rate that you're using, and there are manuals of several hundred pages written about which discount rates have to be used. And on the other hand, you have to take into account a risk adjustment. So you cannot simply say, this is what I think are going to be the cash flows. No, you have to have a kind of prudency in that calculation, which is called the risk adjustment. And the risk adjustment is for both financial, but in particular non-financial risks that you have to take into account. And it's something, if some of you are already comfortable with Solvency II items, this is something that is already something that you see under Solvency II to come up with a risk adjustment in those calculations as well. Okay, then on the IAS 1, there's a change where you can make materiality judgments when disclosing accounting policies. So it's not simply that you just list all the IAS and IFRS statements that are applied in the financial statements. No, the IASB really wants you to think about what is really relevant for understanding these financial statements. And so IFRS 15, the revenue recognition is very likely to be material for any company. So you would expect that you explain a little bit about IFRS 15, but then, for instance, if you're going to split just a little part of your revenues into components, then you don't have to really list what you did with all the splits of the components, because in the total of your financial statements, that split is not material. As auditors, this means one thing: we're going to have nice discussions on what our clients will think is material and what we believe the users of the financial statements need to be informed about to understand the financial statements. So my advice to all of you is already start today or tomorrow with discussing with your clients how they're going to deal with this requirement on the IAS 1, because if you're going to discuss this during the year-end closing, you're way too late and you will have problems making the timelines. Then the IASB has introduced a definition for accounting estimates. You would think, why would they do that? Well, actually, there was no definition. They said a little bit about what to do with accounting estimates, but they never said what the definition is. So the definition is now in the new standard, and next to that, they also have included a sentence about how accounting estimates and accounting policies are related to each other. It's not something that you would have to disclose in the financial statements. It's just something as a background that will be helpful. And then finally, IAS 12, the statement on tax. As you probably all aware, the OECD has proposed a Pillar 2, where income taxes for global companies should at least always be 15%. So then the question arises, what do I need to do with this requirement that will kick in a few years when calculating my deferred tax position? And the IASB has now said, we're not going to do anything with this at the moment. Only when the legislation becomes enacted, we will have to deal with using the Pillar 2 rate as a basis for the deferred tax calculation. Okay, so this is the part for everything that changed during 2023. Perhaps this is the moment for some questions before we move on to 2024.
Any questions? Yes.
Yeah. Thank you very much. I have a question related to the.
No? Okay, then I'll move on to 2024.
No. There are questions.
Oh,
there
sorry.
Are questions. Yeah. Need to wait. Yes. There is a small delay.
I have a question with respect to the.
Sure.
Can you hear me?
Yes, Ilgis, please go on.
Yeah. I have a question related to the materiality judgments. You mentioned that you recommend to discuss this matter before the year-end closing with our clients. And my question is, how often do you have any disagreements with your clients with respect to this matter? Because quite often, usually their materiality thresholds, they are much less compared to the audit ones. Is it like the practical point in your practice?
Should I wait longer?
So, Mr. Haro, you didn't hear the question from Ilgis? I think you should press maybe F5 if you didn't hear the question from Mr. Ilgis. No. Mr. Haro, are you with us?
Hello, вы с нами? Mr. Hara, did you hear the question? I have a feeling that Mr. Hara is not live with us. He's not online. Hara, can you hear us? Hara, you need to press start broadcasting, join broadcasting, join, go online, go live. Can you go live?
Am I back?
Yes, yes, Mr. Harold, you're back.
Okay, sorry. Yeah, I think that pushing F5 was not a good idea.
It's okay. Mr. Ilgiz had a question actually. Ilgiz, can you please repeat your question and let's make sure that Mr. Harold can hear you this time.
Yeah, hello.
Yes.
Thank you, Michael. Yeah, my question relates to the part of your presentation talking about the materiality judgments. You recommended to discuss this matter with our clients before the year-end closing. And my question is, how often do you have any discussions or disagreements with your clients on this matter? Because in our practice, usually the materiality thresholds which we use in executing our audit procedures are much above the materiality threshold set up by the clients in defining the accounting policies and compiling their financial statements.
To be honest, I've not seen the discussions in our practice yet, but that's primarily because we are dealing with all the years with our clients at the moment. So for our statements, we don't see it. But what I know from my previous experience with Big Four companies is that talking about how to disclose things in the financial statements, it's always a good idea to talk about that a few months before the year end. Because indeed, discussions usually take a few weeks to complete, especially when you have to go back to technical departments. So in that way, and it's always easier to already have it in the financial statements and agree upon it with them. And they can decide whether they want to change anything or not. Probably if they're not going to change anything, we will feel comfortable because we signed off on it last year anyway. But if you have a proactive client that really wants to change how they're going to disclose their accounting policies, then it is possible under the new statement to really delete a lot of the things that are in the accounting policies nowadays, as usual. I think that in an average IFRS financial statement, you will have like 15 to 20 pages of accounting policies. And you could really think, yeah, and that's probably what the IASB did as well when they changed this, is it going to help when you put something in 15 pages of text? And so the user of a financial statement is usually somebody who is figure savvy. They like to look at figures. They don't like to read text. So in that way, it's probably wise to try to capture the accounting policies in another way than that we used to do, or that our clients used to do until now.
Yeah. Thank you very much. Thank you for your answer.
Yep. You're welcome.
I think we have some more questions, but we can wait from our Russian colleagues to translate these questions.
Okay. Then I'll do for 2024 first, and we will see at the end whether the translation is ready by that time.
Can we just wait until, because it's specifically to IFRS 17 actually the questions, Mr. Hara. So can we please have now the questions that you would like to ask Mr. Hara as regards to IFRS 17? So, Mr. Haro, I have.
Hi, Lina. Can you join us as a presenter, as a panelist, and voice your question?
I have some questions that I noted down. So, number one, it says that the determination of adjustment for non-financial risk. IFRS 17 does not provide a specific measurement method for determining the adjustment for non-financial risk. How can this risk be determined and calculated, and what methods do you recommend?
Okay. Yeah, I promised at the beginning that I wouldn't go into depth a lot, and this question is really, really deep. To be honest, there are several methods that are available if you look on the internet. One of the main examples is what is done under Solvency II in mainland Europe, where they calculate the risk margin. That's something that you can actually use as a kind of a reference of what you would expect in the calculation of a risk adjustment. Yet the problem with most of the IFRS standards, of course, is that they are principle based. So they will just give a direction where the preparer of a financial statement has to go, and then we as auditors have to decide whether we believe it represents a fair view. And in that way, the client needs to make a choice and needs to document why they believe that a certain method of calculating a risk adjustment is the best. And you can do a percentage on the risks, or a percentage on the capital, or you can actually look at do a whole analysis of the risks and the events that happened for that risk during the past 20, 30 years. Or you can look at market data. There is no wrong answer for this. That's the problem. The only thing that is important to understand as an auditor is, do I think that the data that has been used to calculate this is appropriate in this case? So if I only have, for instance, if I'm looking at operational risk and my data set goes back 3 years, then I would say this data set is not efficient enough, because I am supposed to look at a 1 in 200 year event. So looking back 3 years is completely not representative for a 1 in 200 years event. So those are the questions that you can look at when you look at the calculation of something like this. And I already advised the people of FinExpertiza that, okay, if we want to go into details on items like this, we have to set up a deep dive session, as I said at the beginning, because it's really, really technical, and that's not the purpose of the presentation today.
Okay, thank you very much. Question number 2: what are the approaches for determining and calculating the discount rate?
Yeah. So as I said at the beginning, there are bookworks with multiple with hundreds of pages that define how, or that discuss how to define the interest rate. So the principle is quite simple. You look at the market rate for your investments, and then the discussion starts: in what way is the market rate representative? So there can be a add-on or a deduction for market rates that are not seen as representative for the business, and there the discussion starts. There is guidance. You can go back to Solvency II, of course, but also at a global level, the international calculations for the big insurance companies in the world. There's also some guidance on how to calculate the interest rate that you should apply for discounting your cash flows.
Okay, very good. Thank you, Mr. Haro. Any questions, colleagues, before we move on to IAS 1 and IFRS 16? So if not, I think, Mr. Haro, we can proceed.
Yes, thank you.
The next. Thank you very much. The floor is yours. Thank you.
Okay, so this is looking forward. The items that will be changing in IFRS for 2024 and further on. So there's 3 of them. The first of them is something on lease liabilities. The second is the classification of liabilities as current or non-current. And the last one is the requirement to disclose supplier finance arrangements. For all of these three items, I would say first try to identify whether your client actually has transactions that are linked to these changes, because otherwise it will be very quick next year to look at changes for IFRS. So for sale-leaseback transactions, the problem was that there was no real definition of how to calculate the liability in a sale-leaseback transaction by the lessee. So now, in fact, people used to say, okay, I will look at what is for a regular lease transaction, but the standard was not clear enough. So therefore, the standard has now been clarified, and it has been said that there has been clear guidance on how to calculate the lease liability. And also, it says something about the last part of this sentence. It doesn't. The requirements do not prevent the seller from recognizing profit and loss at the moment that the sale-leaseback is initiated. Then the second one is about how to classify liabilities, either current or non-current. And this all has to do with where do I need to present my liability. In the past, companies could not classify a liability as current or not, sorry, they could classify when they did not have the conditional right to defer the settlement, at least 12 months. And this requirement has now been taken away. And instead, it now requires that you have a right to defer settlement. And that right must exist at the moment that you report, at the reporting date. So in that way, what you see is that you move from something that is very set at, okay, at least 12 months to something that is set, okay, look at reporting date. Next to that, the IASB has reconfirmed something on the covenants, that you must comply on or before the reporting date and with the covenant to classify a liability as a non-current liability. And finally, there's a clarification on when a liability includes a counterparty conversion option. And this is very specific, so I would just advise you to look for whether this situation applies at your client. Then the last one, which are supplier finance arrangements. So these transactions are becoming more and more commonplace, where suppliers are already paid by external parties before that their client has to pay the supplier. And if the company is a client, IAS 7 and IFRS 7 now require that all the liabilities that fall within those supplier finance arrangements have to be disclosed separately. So what does it mean? I will buy something from a supplier. I get 60 days to pay the supplier, but the supplier is already paid by a finance company after 15 days. Then I need to disclose the fact that my supplier has already been paid, and I also have to disclose that on this arrangement, I'm allowed to pay after 60 days. So this means that something that normally you would think is not relevant for the client in this case is now becoming relevant because we need to disclose it in the financial statements. What do we need to disclose at the bottom? So I need to disclose the amount of financial liabilities for which my suppliers have already received payment. So I need to get information from my suppliers here because, of course, I don't see any record in my own administration of the supplier being paid. The only thing I probably will get is a notice from my supplier saying, you don't need to pay me, you have to pay this and this finance company. Next to that, the IASB also wants companies to disclose which part or what are the payment dates for the part that falls within the arrangement. So if in my example it's 60 days, I will have to disclose for my supplier finance arrangement, my payment term is 60 days, but I also have to disclose for the same type of payables that are not part of these supplier finance arrangements, that for instance my payment term is 30 days. So in that way, the IASB is trying to get a clearer view on how the financing of the company has been arranged. Okay, that's it. I hope that I caught up a little bit of time because we were running behind a little bit. Are there any questions on the 2024 changes?
Thank you, Mr. Haro. So any questions, colleagues? Please, now it's the time. As regards IAS 1 and IFRS 16, IAS 7 as well.
I have one speaker who hasn't finished his presentation, and maybe we could
That's a
let
good
him,
idea.
let Sergey finish his presentation while we are trying to work out these problems with Jaish. Jaish, I think you should go back to your notebook. I don't think your telephone will work. Could you please try setting up your notebook properly? And in the meantime, we'll let Sergey
Yeah, that's a
Так, я в эфире, да?
Да, Сергей, я вас слышу.
Sergey finish his
Yes.
presentation. How about we do that?
Yeah, Mr. Sergey, we can't hear
So
him.
I'm-
Please proceed.
И
Very good.
мы
For this opportunity to finish my presentation. So I was saying that our approach in Russia is somewhat formal because we have to work with pretty strict oversight from regulators. I want to finish my presentation first, and then I would like to say a few words about risk-oriented approach. So you have a lot of musts here. An auditing firm must do this, must do that. Information risks. There is a new section on documenting. In the past, we only had documenting, auditing files, but now it has been expanded, and we are required to have a procedure for archiving, documenting, quality management issues. We have an expansion in the resources section. In the past, it was only personnel resources. Now it has been expanded. And more importantly, a risk-oriented approach with respect to each of the 7 remaining risk components apart from risk per se. We should identify goals which will be our targets when implementing the risk-oriented approach. as part of the quality management process. And I want to give you a direct quote from the standard. I go to a risk assessment component. An auditing firm must develop and implement a risk assessment process. The auditing firm must establish goals, identify and assess quality risks. Now, let me go back to my presentation. Here's an example of the matrix. Since it's been over an hour since I started presenting this matrix, I think this document can be quite useful. I think an auditing firm should design something like that. And this matrix should have all methods of information interaction and the subjects of information. And you have these subheadings here. Again, depending on the scope, how complex the system is, what your scope is. For a small company, some of the subheadings may be missing because you may only have one person in charge of all these things, so it doesn't make much sense to have a large number of columns. So you may have fewer columns in your matrix. I think it is really important and necessary to have such a matrix in front of you, because nobody can keep all those things under control, and you need to delegate a responsibility to others. It is very possible that you don't have a certain regulation, you don't have a certain rule within the company that tells employees how they should handle information. So you will have to produce that based on, I think standard 1 defines the responsibility of the auditing firm pretty clearly. This matrix, this table will look pretty similar for many companies. Actually, the table I have prepared may be translated into various languages and used in various countries. There might be some adjustments that you will have to make for your specific country, of course, based on your local regulations. Next.
So this is the checklist as part of a specific auditor assignment. So again, you need to be aware of how material binding it is. Every subsidiary of our group has its own suite of software, plans and strategies that enables or guides communication with those in charge of corporate governance, with if there's a threat to independence, the auditor group shall notify the group and address these issues. Well, one of the threats is related parties, one of the risks. So if you go then make a big team, and someone identifies non-identified clients or a previously non-identified related party, and they should raise the alarm, raise the red flag, and work with other auditors of the group to see what's the impact, to work with the client, how to fix it. So I'm sure that you have these items in your software. So we need to have this checklist. And why is it important? You can use it as a reference book, as a manual. can have a long list, and it will be done in line with the IFRS standards. And the code of ethics has been incorporated with a purpose. We should not forget about it. There are a lot of items, there are a lot of cases when the auditor has to take some action. Russian regulators are really conscientious in whether you fix it on paper, whether you put it on paper, who you worked with, when. So the authorized bodies, our regulators, will inspect everything and make sure that it's in place. So you need to have this kind of document, this kind of reference book or guide or manual. I hope you have it as part of your software. But if you don't have this within your software, then I guess the checklist would be very useful. It will help you to address many issues, some of the gaps, and make sure you will not make sure these risks will not materialize. Again, you need to figure out whether this is in proper body or whether it's the authorized. So it's now being kind of designed, it's now being discussed. But I'm sure that our group members would love to get this document. I don't think there are any country-specific parameters here, so I guess it will be useful and valuable to anyone without any major adjustment. We'll just need to do some translation of the document. So, do we have any questions? I've tried to share some of the most practical, hands-on insights. Yeah, maybe it's too much formal, but in some ways, but it's not just about the quality of financial reporting that we must check. We also need to be aware of our own risks as an auditing firm. Any questions? I'll be happy to take any.
Thank you, Mr. Sergey. So, colleagues, any questions to Mr. Sergey? Or should we try one more time to make a connection with Mr. Jayesh?
Сейчас мы пытаемся соединиться.
Thank you, Mr. Sergey. Thank you for your time and a very informative presentation. So, Mr. Jayesh, can you hear us? Are you with us now?
Mr. Jayesh, Mr. Parma, can you press start webcasting once again or go on air? So you're supposed to see your own video and to see your own mic. And then you can select the mic and then just start webcasting. I can see that you simply don't have the webcam and microphone. I mean, maybe you can reboot your computer, Mr. Parma. You might have these issues if your camera or microphone are not accessible. It means that your operating system cannot identify your camera or your microphone. So it's kind of looking for it, looking for these devices. So maybe you can reboot it so that any of the technical glitches will be fixed after it's rebooted. Do we need to wait? I would suggest waiting for 1 minute. I'd like to thank everyone for these insightful reports. We don't have too many questions, but we think it's going to become a very good tradition so that each of you would be able to network, to address each other with professional questions and to get professional advice.
Yes.
Or we may, have
Well,
these
from my
gatherings
side,
on a regular basis. I hope you won't have, well, if you have any further issues or any further questions, please share them with us. We will discuss them in a centralized way. We might have any other dedicated sessions for specific items. Hara suggested a good idea. So if you're interested in standard 1617, we can have an extra meeting to zero in on the specific cases. Galina might share some of these cases with us, and we can set up such a meeting. We'd also love to know which topics you are interested in, so that our next meeting could focus on these, on your concerns, on some of the practical issues that you.
So, from my side, I would like to thank both the participants and our colleague, that the presenters as well. It was a very constructive webinar. Actually, it's a very good idea. From now onwards, we can create a webinar based on the needs that we have as a network. So it would be good to drop an email with any suggestions and recommendations that you might have in order to address them in the most appropriate manner. By the way, we do owe Mr. Jayesh a presentation, and I'm sure that in the near future he will be opening up, I believe, a webinar of our network. So next time we will do it. Thank you very much. And if you do have any comments, we are open to hear them. Thank you.
Ну что ж, хорошо, все ясно. Well, I don't think we're going to have any questions. We may wrap it up. And Anna, I have a suggestion. I think Jayesh could be recorded, and we can then share this video with the audience.
Very good recommendation. Have a nice day to everyone. And thank you once again.
Ну что ж, все, тогда хорошего дня всем. Еще раз